Hey everyone, welcome to the channel. If you are looking to start investing in a stock and have no idea where to begin, don't worry. You are in the right place. In the next 10 minutes, I am going to walk you through everything you need to know about investing in a stock as a beginners. I will cover the basic and strategies and even the mistakes to avoid so you can avoid common pitfalls and start investing with confidence. By the end of this video, you will be ready to make your first stock purchase. Stick around to the end of some extra tips and free resources to help you get started today. Let's dive in. Before we are starting investing, we need to understand what a stock are. Simply put, a stock represent ownership in a company. When you buy a stock, you are buying a small protection of that company. If the company performs well and increases in value, so does your stocks. There are two primary ways to learn from stocks. First is capital gains. This is when the stock increase in value and you can sell it at a profit. Second is dividends. Some companies distribute a portion of their earning back to shareholders, usually on a quarterly basis. Now, why should you consider investing in a stock? A stock generally offers higher returns than other types of investment like bonds or saving account. Over the long terms, the stock market has historically provided an average annual return of about 7 to 10%. That means if you hold your stock long enough, they can grow your wealth significantly. So, why should you choose a stock over just saving your money in a bank account or other safe option? Here is why. Higher returns. A stock have historically proved an average annual returns of about 7 to 10% compared to 1 to 2% in a typical saving account. Compounding. The magic of compounding means the longer you stay interested, the more your money works for you. For example, if you invest $100 a month for 30 years at a 10% return, you will have over $2 lakhs by the end. In shorts, if you have in it for the long haul, a stock can help you build wealth at a much faster rate than a traditional saving method. Before diving into the stock market, ask yourself, what are you investing for? Setting clear financial goal will help shape your investing strategy. First is long-term goal like saving for retirement, where you can afford to take more risk because time is on your side. Second is short-term goals like saving for a house, where you might want to focus on safer investment. Clarifying your goals will guide your risk tolerance and help you make a smarter investment choice. Before you start investing in a stock, make sure you have an emergency fund in place at least 3 to 6 months worth of living expenses. This cushion will help you avoid having to sell your stock in a hurry if sometime unexpected comes up, like a job loss or medical emergency. Risk tolerance is an essential factor in your investment strategy. It refers to how much risk you are willing to take with your investment. High risk. If you have younger and have time on your side, you might be comfortable with growth a stock that have the potential for high returns but also higher volatile. Low risk. If you need your money sooner or are risk advisor, you might choose a safer investment like blue chip stock bonds, or dividend paying stocks. Understanding your risk tolerance will help you choose investment that align with your financial goal and peace of mind. To start investing, you need to open a brokerage account. This is where you will buy and sell a stock. You can choose from traditional brokerage firms like Fidelity or Careless Schwab, or app-based brokers like Robinhood or Webwool. Make sure the brokerage you choose first your needs, low fees, easy of use, and whether they offer fractional shares so you can invest a smaller amounts. Some brokers also offer commission free trades so you can save on fee. Research in critical when choosing a stock. Some metrics you want to look at include: first is price to earning ratio, how expensive the stock is relative to its earning. Second is earning growth, is the compound making more money year over year. Dividend yield, if you are looking for income from your investment, look for companies that pay dividends. Fourth is industry trends, is the company in growing sector. Start by investing in companies you are familiar with, but make sure to research their fundamental before buying. Diversification is one of the best way to reduce risk. Instead of putting all your money in one stock, spread it out across different industries and asset type. A diversified portfolio might look like this: 40% in tech stocks, 30% in blue chip or dividend paying stock, 30% in safer investment like bond or ETF. Diversification helps protect your portfolio from downturns in one sector and gives you exposure to different areas of the economy. Investing is a long-term game. Buy patent the and stick with your strategy. Dollar cost averaging is a great way to invest consistently by putting in a fixed amount each month, regardless of market condition. Over time, this reduces the impact of market volatility and build wealth steadily. Once you are comfortable with the basic, you can explore more advanced strategies. Index fund and ETF. These are a basket of stock that track an entire market index like the SP 500. They provide automatic diversification and have lower fees. Growth stock. These stocks are expected to grow faster than average, but they can be risky. Third is dividend reinvestment plans. If you are looking for passive income, DRIPs automatically reinvest your dividend to buy more stock, accelerating your compounding. Here are the top mistakes to avoid as a beginner's investor. First is panic selling. Don't sell just because the market drops. Stick to your strategy. Second is chasing hot stock. Don't invest in a stock just because it is trending. Do your research. Third is lack of diversification. Avoid putting all your money into one stock or sector. Spread your investment across various assets. 7 is and uh, and that is a wrap on your comprehensive guide to investing in a stock. Remember, the key to success is consistency, research, and patience. You don't need to be a financial expert to start, just start small. Stay educated and let your investment grow over time. If you found this video helpful, don't forget to hit that like button, subscribe, and turn on notification for more money and investing tips. Leave a comment below if you have any question, and I will be happy to answer it. Thanks for watching, and I will see you in the next videos.